Let's review adjusting entries. So there's a few different rules that we can follow here for adjusting entries. First, every single adjusting entry will have one income statement account and one balance sheet account. Then we will either be debiting an expense or crediting a revenue. And we will never use cash. So we'll use these three rules, these three guidelines for us as we work through some adjusting entries. So it says Lincoln Company had the following balances in a few of their accounts at the end of December of 2019. So we have a list of account balances, and then it says to prepare the adjusting entries for the following. So we need to go through each of these 5 and prepare adjusting entries. So let's do this first one. Lincoln Company borrowed $30,000 by signing a 7% 3-month note on December 1st, 2019. Well, we would have already shown back on December 1st that we borrowed this money. So that's not the entry that we're making here in our adjusting entry. Here, we need to show the interest that we owe. So we will debit our interest expense and credit our interest payable. Now, how do we figure out our amounts? Well, interest equals your principal times the interest rate times time. Now, time is always in terms of 1 year because our interest rate is always an annual interest rate. So our principal, that's the $30,000. Our interest rate's the 7% or 0.07, and it's been 1 month. So we multiply that by 1/12. So we find that our interest is $175. So we put the $175 up into our entry. Now, account of supplies on December 31st showed $1,200 of supplies on hand. Well, if we take a look at the balances that we had going into December 31st, we thought we had $3,000 of supplies. But now we only have $1,200. So our supplies are decreasing. So we'll want to credit our supplies. And if we think back to our rules now, that means that the debit has to be some sort of expense. Well, that's going to be a supplies expense. So we'll make a T account for supplies. And we start with $3,000 and we need to end at $1,200. How do we go from $3,000 to $1,200? Well, we need to credit something. So if we take the difference between those two numbers, we get $1,800. And that's the amount that goes up into our adjusting entry. Now, depreciation on our equipment is $100 for the month of December. So we need to count the expense, the depreciation expense, and then we credit this contra asset account called accumulated depreciation equipment. So it's a contra asset, which means it's increasing with this credit. Now, how much? We don't need to overthink this one. They told us it was $100 for the month. So we'll debit our expense $100 and credit accumulated depreciation $100. Now, Lincoln Company paid $2,400 for a 2-year insurance policy on December 1st of 2019. So we're dealing with this prepaid insurance that is going to have to decrease, right? So how do we do that? Well, we will debit our insurance expense and we'll credit prepaid insurance. Now, how do we figure out the number here? Well, it was $2,400 for 2 years of insurance. We need to figure out the amount for 1 month. So 2,400 times 1/24, because there's 24 months in 2 years, and we find that our insurance has expired $100 in the month of December. Now, on December 1st, Lincoln Company collected $50,000 for services to be performed December 1st through April 30th. So back on December 1st, we would have recorded that we got $50,000 in cash and our unearned service revenue increased by $50,000. But here, a month has gone by. So, we've now done some of the work. We need to count the revenue that we've done while also decreasing our liability, because now we don't owe this customer 5 months of work, we only owe them 4 months of work. So how do we figure out the number here? Well, it was $50,000 for 5 months. We need to know how much it is for 1 month. 50,000 times 1/5, or just divided by 5, and we see that each month is $10,000 of work. So here are all of the adjusting entries that we made. And you'll notice in these entries, words are similar, right? Interest, interest, supplies, supplies. That's going to be a theme as you continue on with your adjusting entries.